Good afternoon, students. What I would like to do today is talk a little bit about Module 6, which covers Chapter 8, and Chapter 8 is on receivables. In Chapter 8, you will see information on accounts receivable and information on notes receivable. The overview that Dr. Carroll gives you in the beginning video introduces you to the concept of receivable, explains to you what receivables are and why we have them, and talks about different methods. So what I want to do today is I don't want to repeat the things that he's already talked about, but I do want to explain further the methods that we're going to be looking at. So accounts receivable arise because we give customers the benefit of the doubt and accept their promise to pay in the future. But not all accounts receivable will turn out to be good, so we'll have to write off the ones of the customers who don't pay us. And so we can do that in two ways. We can do that in the direct write-off method or the allowance method. The direct write-off method is used by companies that have very few accounts receivables or who have very few write-offs. The direct write-off method is not generally accepted accounting principle, so it cannot be used by the majority of corporations. The majority of corporations have to use what we call the allowance method, and the allowance method determines an estimate of what we think the bad debt will be, and we put it into an account called allowance for doubtful account. This allowance for doubtful account has a credit balance, and it's subtracted from the accounts receivable balance on the balance sheet. What I want to demonstrate to you are the way that we handle the accounts receivable under the direct write-off method and how we would handle it under the allowance method. The allowance method, because we're making an estimate, we have two choices. We can either use sales or accounts receivables. So I will go into that further. So what I have to do now is stop this video and change to the actual problem so I can demonstrate the information. So the first thing I'm going to demonstrate is the direct write-off method, which we write off the accounts receivable directly to the bad debt expense account. And then I'm going to illustrate the allowance for a doubtful account method, in which we create an estimate and then we write off the account against the estimate. So we will do that first, and then I'll come back and go over the notes receivable information that's in the chapter. All right, I'm signing off now, and I'll have another video shortly.